Hello, my name is Steve Bigelow with the Candlestick Forum. We've had evidence that there's going to be, or was going to be, a market reversal very soon. Today we saw it. As we pointed out over the last few days, the dojis in the oversold condition were different pieces of evidence that there was a change of investor sentiment coming. And then we also saw that we had a bearish engulfing signal in the oversold area. Kind of a prelude to the fact that that's usually the last gasp selling and that we might start seeing a reversal. Well, today's positive trading, the gap up and the positive trading today created a morning star signal. And the magnitude of this return, with the Dow coming right back up and closing slightly above the T-line, now gives much more evidence that the buying has started to come back in. This was more evident on the NASDAQ also, with some dojis, and then a doji right here at the support level. And today when they gapped it up at or very near the T-line and went through, that pretty much told us exactly what the T-line was representing anymore. It wasn't representing a resistance level. That this best friend type signal, morning star signal, is a very high probability that now the investor sentiment has changed and we should be looking for bullish trades. Our recommendation on Hasbro was based upon a bullish flutter kicker setup. This candle right here was a dark candle. Then on yesterday, they gapped it up above the previous day's open, and notice where they did the doji, right smack dab on the T-line. This made for a very high probability trade setup. First of all, the doji rule, that if it opened positive, it was probably moving in the direction how they opened it after a doji. Secondly, if it was going to trade positive after a dark candle, if you took out this little doji out of your bullish flutter kicker, if you took out the flutter, you essentially have a kicker signal, which is one of your strongest price moves. This allowed us to move immediately, seeing the positive trading on the open today. The same scenario was applied to our recommendation on Microchip. Dark candle, gap up above the previous day's open. A doji right on the T-line. If it opened positive, you could be buying immediately with an extremely high probability that it was going to trade positive, which it did, obviously. And it also illustrates that if you have a bullish flutter kicker signal, the implication is the strength of this reversal or this trend is extremely strong. There should be a lot more upside. This is all kind of taking advantage of knowing that there was going to be a change coming upon visual evidence in the overall market, that we could find positions that were already set up to enter right away, knowing exactly which direction they were going to go on a positive open. And you can utilize that information. Today, Halliburton, after a series of dojis, notice all the dojis down in this well oversold area. Today was your best friend signal, a gap up, and finally a close back up above the T-line. Probabilities, it's heading higher. Where are our targets? Probably up here at least to the 34, which would coincide with filling the gap. Then we can evaluate the magnitude of that return. That's going to be pretty close to 100% return just coming back up to this area. So not only can we visually analyze a high probability reversal, again, a best friend gap up, close above the T-line, a gap to fill, and knowing what the magnitude of that return is, puts us essentially in trades that produce extremely high profit probabilities. This should be the market reversal. Always get asked the rhetorical question, well, couldn't they take it down again? Yes, they could always take it back down again. But the reason we're looking at candlestick analysis is to analyze what the investor sentiment is doing based upon the signals and patterns that have created high probability results over the last 400 years. That'll be it. We'll see you in the chat rooms.